Welcome to Trillions. I'm Joel Weber.
And I'm Eric Balchunas.
Eric, we have a guest who we've been trying to get on the podcast for a while, and she kept getting promoted and pushing us off, but finally we have her today.
Yeah, I mean, we got her before she's running the whole company, which I'm sure will happen one day. But this person has come on ETF IQ a few times, and I bump into her here and there. I saw her once at Vanguard. I go to Vanguard every 6 months or so for something. And I saw her at the Women in ETFs anniversary event, and it's just really always fun to talk to her. She's, I don't know, I just find that she sees Vanguard in a unique way, yet she works there. And
has worked there for a while.
Yeah, and has worked there for a while. And so Vanguard is a little bit of a mystery to a lot of people. I mean, we see the flows. Joel, this year they're going to already, they've taken in $256 billion into their ETFs. That's more than $1 billion a day. Only BlackRock is close, and then the two of them are 3 times more than any other issuer. I mean, it's just ridiculous. The fish are jumping in the boat there. And so we see the numbers, we see the flows, but they're not out and about that much. And so to actually talk to somebody there about what's kind of going on inside and how it feels to be looking at all this from the inside rather than the outside like us, I thought that would be fun.
We're talking about Janelle Jackson, who's the head of Bank and Institutional Financial Advisor Services. That's a big title. She was previously global head of ETF capital markets. So this is a VIP for sure. This time on Trillions, Inside Vanguard with Janelle Jackson. Janelle, welcome to the program.
Thank you for having me. That was quite a build-up there, guys.
No pressure. No pressure.
No pressure.
So we're just gonna,
no pressure at all.
We're going to put that on the shelf. Thank you for joining us. Let's just talk about you and your journey through this little industry and how you ended up being an ETF rainmaker.
All right. Now I feel like I might be able to live up to the pressure because I feel like this is a pretty fun story. And I hope everyone else does as well. Otherwise, it's a podcast, right? So you can just speed right through it. But I've been in the industry for a couple of decades. I know it doesn't look that way, or at least I hope it doesn't look that way. But I started my career working for a bank doing manager research. So I was on the other side of the table from where my clients are now. I'm now in a sales role where my clients are those institutions. And my journey has been pretty organic from starting in that manager research type of seat. So back then I was looking at what other portfolio managers were doing to run products, determining how they would best suit our investors and whether or not we would approve those products for our platform so that clients would have access to them. I went to business school. I always wanted to be a portfolio manager. I joined Vanguard. They've got this really great program for folks who are straight out of business school called the MBA Leadership Development Program. So I went through 3 rotations pretty rapidly over an 18-month period. So that's 3 of my Vanguard jobs that I've had in the past 12 years. One was, again, on the due diligence side of things, but this time seeing that through the Vanguard lens. The other was working with our institutional clients, and then one back in research. So I launched into our institutional advice group after that. So it's bringing together that research background, getting closer to clients. And, Eric will love this, but I was in that role for about 5 months when a post went up internally for a chief of staff to the chief investment officer. And so I applied for that role. At the time, our CIO was Tim Buckley, who's our former CEO. So I got to work for Tim as his chief of staff for 3 years, which is pretty long for a chief of staff. It's usually like an 18 to 24 month thing. And I say it's because Tim enjoyed working with me so much. And he says it's because I needed that much development. So the truth is probably somewhere in the middle. Subsequent to that role, I went to our Australia office to run funds. So my whole career, I'd done research on running funds, talking to clients about funds, and then I got my own chance to touch the money. So I was in our quantitative equity group running factor, multi-asset, and alpha products, at which point I came back to the US after a couple of years running our ETF capital markets team. That's when I first met Eric. A couple years in that role, and then I moved to lead our global ETF capital markets team, which includes our broker relationships and our index relationships, and then transitioned into the role that I am in today a few months ago. So it's kind of been like 2 years. But I think it's just been a really organic process in how we develop people at Vanguard.
So let me get this straight. You were in Malvern and they sent you to Australia, and then you came back to Malvern?
Melbourne to Malvern.
Yeah, you could have been doing this in Australia.
Maybe I'll go back someday.
Yeah, okay.
Vanguard's pretty big in Australia. Like,
it's
depending on the
internationally,
country.
it's huge. Yeah, I'm just saying that seems like a dream job.
Yeah.
And a dream location. So talk to us about Malvern. What's it feel like there? Eric and I have been, but what's it feel like for somebody who's been with the company for so long?
Man, Malvern feels like the core of our culture. You know, we talk about our mission and we talk about putting clients first. And I think every organization says, hey, what sets us apart is our people and our mission. But when you get here, you really feel it. It almost feels like a college campus to me. And we all go to the same school and we're all, cheering for the same team. And when you get to campus, you just feel that. And the funny thing is, when you go to our offices, anywhere they are in the world, it feels the exact same way. People are here to help each other. We're here to help our clients. It attracts a certain type of person to work here because of the mission. So I really think it's a happy place. There's a lot of people here working really hard. But at the end of the day, I think we're all very focused on helping investors reach their goal. So how does somebody get to retirement and feel comfortable? How do people think about their goals and saving for their children's education? Those are the things that make me skip out to my car at the end of the day, feeling like I'm a part of that.
Yeah.
And by the way, Malvern is right next door to Valley Forge, which was the original office. Bogle loved that. I think he even kept Valley Forge as a P.O. box for a while so they could say they're in Valley Forge because that's where the US Revolutionary Army was on, like, really in their last legs. Like, they were probably about to just
rough winter.
Yeah. And that's where they kind of rose up. And Bogle, he loved that, man. He was so into that. But I also think, like, you're walking around this campus. I've been there. It is like a campus. There's people walking around. Now, the fish jump in the boat. There's flows coming in every day. I guess, does the mood is it just a great mood because there's always inflows?
It does seem like
you would think
the background
right?
there. That's a pretty happy environment.
Like, you never see outflows. Joel, they have never seen, they don't even know what it's like. In 2008, they took in money every month.
The thing here is, it's a very humble culture. We think about it in the way that, like, hey, this isn't our money. We're stewards of this capital for others. We're owned by our shareholders. So we're coming in, we're working hard every day to make sure that we're doing the right things for clients. So yeah, I hope everybody is happy, but we definitely don't take that success for granted. We're always being thoughtful about the future, about opportunities for growth, and about the best ways that we can serve our clients. But if I can take a second to go back to, like, how I think about my career, because I know some people are probably like, whoa, she's just skipping around the place. But I think about this way of developing expertise akin to, like, the hospitality industry. So when I describe it to people, it's like, hey, I started my career doing research, which is akin to thinking through recipes, like working in a restaurant. So I'm helping somebody come up with the menu. Then, as a portfolio manager, I move into the kitchen, and now I'm starting to cook up the things. Now moving into sales, all right, I'm like the maitre d' at the front of the house, and my team is bringing out the meals to clients, our patrons, and hoping that they're happy with that. We're offering it to them at a low cost. But the tricky thing now is that, we sit on a street of restaurants, and a lot of other restaurants are cooking up the same things we are. And some of those restaurants, Eric, are putting hot sauce on their meals. And so how do we keep clients coming back to us by making sure we have what they want that fits into, a way that we think about the ingredients that we're experts in delivering. And so I just view my career as it's very organic. And I feel like all of those opportunities that I've had to touch and lead different teams have helped me be successful over time and in the role that I'm in today.
We do talk about hot sauce a lot, and
Yeah.
Hat tip to Eric. What is the spiciest offering in Vanguard's portfolio, do you think?
Spiciest offering in our portfolio. So I'm probably going to, I feel like this is a leading question.
No, it's just a question. Just a question.
I think the things that we think of are spicy, like we still serve up with a glass of milk. So if you think about something like high yield bonds, an actively managed high yield bond fund, we're going to have a quality tilt on a product like that. So it's not going to be the junkiest of the junk, but it'll still get you the exposure that you want in a safer way. So that's your hot sauce with a cup of milk.
I have a story about this real quick. So I wrote a note once when you worked at the quantitative group. You guys put out these factor ETFs about like 8-9 years ago. And they equal weighted, which jacks up the vol. And so this was the most volatile thing Vanguard ever put out. It was actively managed volatile factor stuff. At the time, everybody was putting stuff like this out. And I wrote a note that said, Vanguard serves up the hot sauce, but hold the Bogle, something like that. He used that in one of his books. He goes,
oh, yeah.
Bloomberg knew how I felt about it. And so even something like that, it was like an equal weighted quality ETF. You know, there's the DNA of like S&P 500, beta, total market. And then Vanguard, I feel like, this is just my opinion, I'd like to get your take on it. You do kind of push the edges a little. You know, there's the Boglean DNA. Then there are places, private equity, China. There are definitely places that I think Vanguard goes that push the envelope a bit, but not anywhere near the way other issuers are pushing the envelope into the more hot sauce areas. Do you notice that? Like, is there a constant push against the edges to see how far you guys can go?
You know, I would say that what our product lineup has evolved to be over time has just been aligned to the evolution of markets. So we've had the same approach to product philosophy for our entire history, and we really focus on 4 things when it comes to product development. And I get questions all the time, like, when is Vanguard going to launch an XYZ fund? And, you know, I always take people back to our product philosophy around how we develop products. So is there enduring investment merit? And this is usually the one where people get hung up the most. Like, is this something that's been rooted in academics, that it makes sense for a client's portfolio? You know, does it fill a long-term need for a target client? Like, that's number 2. So enduring investment merit, long-term investment need. So not any kind of tactical, trendy, cool things that are happening right now, but things that will be enduring over time. You know, can we deliver this solution at a competitive advantage? Sometimes we're the best at things, and that's where we like to produce products, and where we can't do it or where we feel like it's a stretch for us from, you know, how we think about portfolio management, we're not going to go there. And is it feasible to launch the product? So this is the boring stuff, like regulatory, operational hiccups, but it really always goes back to that first line, the first 2 really. Is there enduring investment merit around this? Has the research been done? Does it make sense? And number 2, is it going to be something that is a solution that's going to have long-term investment merit? That's how we think about solutions for our client base.
Yeah.
And if it's resulted in us, like, you know, keeping a rake in the closet and the cash is just coming in and we rake it up, that's kind of how it's been, and we like that.
When we bumped into each other in one of the ship offices, I don't know, name a ship type. It was in one of those. What office did you work in capital markets? What was the name of the building?
Victory.
Yeah. So all the buildings are named after ships. That's another thing. Bogle the whole company is named after a British warship that took down Napoleon. Anyway, if we look at the stuff you sort of teased a little bit about this sort of trendy, one thing that I've noticed as I've sort of become somewhat fluent in Bitcoin. I spent the last year on Planet Bitcoin. I think I'm pretty knowledgeable now. When we look at the growth of Bitcoin, these ETFs have blown up. Like IBIT is now $40 billion. It's the top 1% of all ETFs. People will reply. It's like not enough for them to have like all this money, all-time highs. They're still bothered by you. They're like, Vanguard, what's their problem? Why won't they bend the knee? There's a meme going around that has your ship logo, and then instead of Vanguard, it says NGMI, not going to make it. Mm-hmm. And the ship's and the ship's breaking in half. Anyway, that's just. Do you think about this at all? Do you care? Is there any temptation at all? I know Salim has basically kind of shot down. That's the new CEO. But
that's Salim Ramji, who actually was on Trillions when he was at BlackRock and before he made the transition.
Oh, yeah.
But what does all that look like from afar, or are you just insulated from all that noise?
You know what? It's a funny meme. I appreciate the feedback around products. So, you know, hopefully there aren't too many more people jumping into my LinkedIn chats because of this. Like, that does happen a lot. But yeah, I think we've talked about why we haven't entered that product space. But what I do think's been really cool is like you still see the Vanguard effect there, right? Like you kind of see these competitors that have fallen all over themselves to have the lowest cost product. And I think that even where we don't have a product, you can feel the Vanguard influence. And so for clients who do want to, you know, leverage those types of products, they're there. I think there's plenty of competition. It looks like it's been a healthy year for those products. So yeah, I feel like we've done our job, even though we might not be directly, we've influenced what that looks like.
So basically, crypto Twitter, you're welcome. I like that. That's pretty good. Way to pivot from that to that.
I did not say that.
I was going to say, I think she was pretty clear about it.
Well, I just summed it up.
I said, LinkedIn, you're welcome. I'm just kidding.
So you did hit on something there, though. Salim Ramji, new CEO. And since you have interacted with previous CEOs, previous CEOs at Vanguard, I'm curious, how do you think he's going to make his mark? And what's the plan?
Yeah, I think everybody's really excited that Salim is here. He brings a host of knowledge to this organization. I will say, I hope he doesn't fire me for this, but I think when he got here, we were all like, oh my goodness, there's a BlackRock guy here, and he's running the ship. But he's very thoughtful. He's very warm. I really like that, like as a person. He's very warm. I think he has kind of looked at what's going on in the house and is thinking about his long-term strategy. And what I'm most interested in is, are we going to be more aggressive when it comes to product launches? We've been pretty conservative, maybe a product or two here or there. I think there's some opportunities for us to think about, what we can do, especially as it relates to active in ETFs and fixed income in ETFs. And I think those are areas of expertise that he brings to the top of the house. And so for me, I'm pretty excited about how he's thinking about the organization. We'll see what other impacts that he has beyond product. But I think that's the most exciting thing for me, especially as I'm getting closer to clients and they ask us questions like, hey, why don't you have, again, like XYZ product? And, as long as, again, it's aligned to our investment philosophy, maybe we'll see some more products to come as we have with, our recent active fixed income ETF launches and some of the work that we're doing with active muni ETFs.
Yeah, so what we've noticed is a lot of the recent products have been active. Active's having a bit of a renaissance in ETFs. It's not totally what it looks like. I think if you remove the buffers and some of the kind of, we'll call it alternative active, bond pickers, stock pickers, definitely doing better than they used to. And I think it makes sense moving into active. I guess when you're thinking about these products and active, Vanguard isn't really known for that. I think, they're known for passive. And do you have to educate them that you have active too? Or do they mostly know because they remember the mutual funds? Because it does seem like, Vanguard kind of basically got everybody to believe that active didn't add a lot of value. I mean, that was what, again, I'll go back to Bogle. He spent many years doing that. Yet at the same time, your active funds grew to, $1 to $2 trillion, I think you have in assets in active. How's that tension between, you're going to get these active ETFs out there. There's definitely a market for it, but you're also known for passive. So you're trying to sell like BND, but also the ETF that's trying to beat BND.
Yeah, I mean, I think this is like a myth that I'm constantly dispelling. So yeah, we're an index powerhouse and an indexing pioneer. But, when you look back at the history of Vanguard, and next year we'll be celebrating 50 years, when the organization first started, all we offered was actively managed funds. So we're really rooted in active. And I think we've also had to dispel this myth around active versus passive. Like there's always been a role for both in a portfolio, but low cost has always been the Vanguard story. So even if you are going to active, be thoughtful about, knowing what you own. You'll hear this a lot when you come to Vanguard next, Eric, that we're true to label. Like that's the new thing we say everywhere we go.
True to label.
You can't just look at what the title of a fund is. Yeah, you have to look through the product at the characteristics so that you know what you're getting instead of just what that headline is. So when you look at a fund name for a Vanguard product, when you look through at those characteristics, you'll find that we're true to label.
So 50 years, what are you guys going to do? Are you going to throw a big party or... I could see Vanguard.
That's Eric inviting himself before we even know.
Knowing Vanguard, they're going to have everyone bring in their own dish. You know what I mean? Because they're going to spend very little money on it because there is no money. All the investors have it.
BYOB.
Hey, look, we wouldn't be doing our jobs if we had a big monster party for our 50 year. I don't know. Maybe we'll find some way to give something back to shareholders to celebrate 50 years.
There you go.
That would be pretty.
That would be on brand. That'd be true to label.
That would be true to label.
True to label.
Boring but effective.
You're working your way off the invitee list, Eric. I don't know about that.
I'll remain neutral throughout this, so keep me in the loop.
I'll send the invite your way. You got it.
Okay, so just on this active question, though, because
Yeah.
it does speak to sort of where the market is going and has gone. And you could put the Bitcoin conversation, you could put the hot sauce conversation as elements of this. And yet there's this thing that is like, your true to label comment. How do you guys just look at innovation, right? Like there's a lot of things that the market's going to do. When do you feel like you have to chase what the market's doing versus just like we do what we do and we'll take our time and assess our options accordingly?
Yeah, I think going back to the product philosophy, like we stay pretty disciplined around that, but I wouldn't say that we tuck our heads in the sand either. Like we're very conscious about how markets are evolving around us. We pay attention to all of the products that are launched. We do a ton of research on products. That doesn't mean we always launch them, but we're always aware of what's happening in the industry. So we might not launch the trendy products, but we know what they are. We know what our investor base wants and what they expect from us. And it's a two-way street. So we try to meet clients where they are, but also in a way that's holistic to our philosophy and who we are.
Okay, can I ask if you have product envy about anything that's in the marketplace that you wish you had in your portfolio? What would that be?
You guys are trying to get me in trouble, aren't you? I think there are a lot of cool things that are happening with alternative assets and bringing those things to the ETF wrapper. I don't know that those things are going to be successful, but that's definitely something that I'm keeping an eye on, be it private equity or private credit. How are people thinking about structuring that into such a liquid instrument? Like, I don't quite understand how that's going to work yet. But if it does, I think that will be really neat to bring that downstream more to retail investors.
I'm with you. This, after digital assets, to me, this is the next new frontier. State Street and Apollo have hooked up. Vanguard, I know you have an advisory service. And the advisory service, I believe you have a relationship with a private equity firm to get some of your advisor clients that access. But that's different than packaging it into a liquid ETF. But that certainly is going to be something that I think is interesting down the road. I guess I was just also curious, like, we all know Vanguard, it's like a legendary company inside the bubble, but like out there in Malvern, when you're like operating your regular life, do people know Vanguard? What's their reaction? Are they like a hometown hero in Malvern? Like, I'm just curious how people respond that you're like, hey, I'm pretty senior person at Vanguard. What do they say?
I'll take this back to Australia when, I would be out and people would ask me what I do and I would tell them where I worked and they were like, what's that? What's Vanguard? And then I would tell them and they were like, oh, shares. Like, oh, you sell shares?
Shares.
Here, I can go to every state in the U.S. and once I say that I work here, people will either say thank you or I'm a client or, I appreciate the work that you do. Like, I don't think there's a lot of celebrities around here. I don't think you'll see somebody's face and recognize us. But we're here, we're doing the work for our clients, and it's so great just to be walking in an airport somewhere and, you chat with somebody and they ask you what you do and you tell them that you work here, and just to hear the appreciation in their voice and the thanks in their voice. Again, like, that's something that makes me so happy that I work here. I could do this work at other organizations, but I really feel like our clients respect and value what we do every day. And in return, I'm giving them the most that I have each and every day that I come here.
And I've obviously covered you guys a ton, and the key ingredient for Vanguard, to me, isn't the index fund. It's the mutual ownership structure. But when you say those three words, people's like eyes glaze over. You almost lost them just by saying the word mutual ownership structure. But it is the most powerful thing that has ever happened in the financial services industry in the last 50 years. It's like, I when I go to see clients, I'm like, Vanguard is like the Big Bang. Like, everybody has to now orbit around the fact that they made beta free. But they didn't just make it free. It was a mutually owned company that slowly voted down to lower the fee year after year. How do you explain that unique structure that no one else has when you meet somebody who's maybe not in the industry?
Well, first of all, it sounds like you've been working in the back of the kitchen as well. So I think the end-to-end spectrum of all things Vanguard. You probably have a better answer for this one than I do. But, I will say that a lot of times people look at us and say we're boring, but we've been innovative. And I think this is one of those cases where you can see us having an innovative product structure that's provided our clients with enduring low-cost investment vehicles for over 2 decades now. And we're confident that will be the case going forward. So we're happy that we've brought a tool to our clients that's been able to add value.
And when we talk about structures, obviously, Bogle loved his TIFs. This was traditional index fund, which was mutual funds. And you guys have a ton of assets in those. Obviously, you have like 70% market share in index mutual funds. But with ETFs, they seem like the future of Vanguard. Whenever you look at percent flows versus percent assets, ETFs punch above their weight every year. Are you guys really looking at this structure to be your future? A, and B, do you see any other structures that could challenge them, like direct indexing or tokenization, which I can't help but editorialize? I don't see either of those messing with the ETF for at least a decade, DI in particular. But like, what's your take on the structures out there and like your future?
Well, first of all, I didn't know we were allowed to say MF on this podcast, but okay, we can talk mutual funds if you want to. I think that, it's all about investor preference for us. So yeah, we started with mutual funds. We built out our ETF business. Where I am in financial advisor services, you see a lot of preference for the ETF vehicle. Where my counterparts are, probably in our institutional business working with defined contribution plans, they probably still have a preference for MF. So I think there's still room for both. Where we've seen a lot more growth for sure has been on the ETF side of the house. Tokenization, I think, is interesting. I think there's a lot of opportunity for operational efficiency for products, regardless of the structure. So I think there's more to come there, but I don't know if it's going to revolutionize like product structure, if it's going to be more of an operational enhancement. Direct indexing, we have an offer there. I think this is a unique solution for, again, certain types of clients who may want to customize what their investments are, who are, in a tax bracket where they're being very thoughtful continuously about tax loss harvesting, or they just want more insight and control over what securities that they own in a way that's structured and thoughtful. So I think there's a room for direct indexing. I don't know if, when these solutions started coming out, they were like, hey, this is the fund killer, or this is the ETF killer. I don't know if we'll get to that point, but I think it's an interesting solution for a certain type of client.
As long as we're talking about Bogle a little bit, you were at Vanguard while he was there. Eric and I came out and visited him once. Eric has written a book about him. Curious, what's your favorite memory of Jack Bogle?
Oh, man. I really loved when I first started working here, which was 12 years ago, and I read all the Bogle books before I got here, and I knew he had an office on campus, but it's like working with Beyonce in your office. So it's kind of like people would get so exciting when there would be a Bogle sighting. But the funny thing was he pretty much walked to the galley, which nautical theme is what we call our cafeteria. He walked to the galley every day. And he was so humble and would engage in conversation with anyone. He was never too busy. He was never in too much of a rush to get his galley salad, or I think galley peanut butter and jelly was his favorite.
That sounds right.
But just yeah, you guys have PB&J with him. Super humble, thoughtful person who was always accessible to crew, which is what we call ourselves, nautical term. And that is what I respected the most. Again, just bringing that like client-centric culture and seeing it at the top of the organization is what really made that cascade down to the rest of us.
Yeah, cool. Want to ask another question because, 401ks, that's a place where Vanguard does a ton of business, and especially in that MF world. What's it like? What's the Vanguard 401k program look like, Janelle, for employees? It's like just Vanguard top to bottom?
Yeah. Yes, of course. So we bring our low-cost solutions to our employees. And I think that's important because if we're cooking it up, like we should probably eat our own cooking. Yeah. I think we also, from a regulatory standpoint, want to make sure that just like any other plan sponsor, we offer the best solutions to our employees. And we are thoughtful about like the manager search process and making sure that we have a lean lineup for our investors to use. I'd say we treat ourselves just like any other client. Yep. Like we want to have the best products there for our crew to leverage as they save for their retirement goals as well. We also have really great benefits around our retirement savings plan. So if anybody listening is looking for a job.
I hope the match is amazing.
It's impressive.
Well,
it's really impressive.
When Bogle started this out, there was in the early days, people were like, yeah, we're saving all these investors money, but we want to get a little something too. And so he created some programs internally to help solve that, because there is like hey, we're doing God's work here. But, people go to business school, they want to make money too. There was always a little bit of a tension there, which I can understand. Speaking of that, I do think if Vanguard does have an Achilles heel, it's customer service. And I was curious, I know that's a little out of your purview, but is that one of the focuses coming up? Or what can we expect to see a lot of resources put towards that in the future?
The answer to that is absolutely. I think there was an interesting article that came out on Salim's first day around our client experience. And, we've really been investing heavily in that space. We listen to our clients. We hear the feedback. We're trying to leverage lots of data that we have in our hands and lots of emerging technologies so that we can get ahead of the game. We're not just trying to catch up when it comes to client experience. I think we all admit that we've fallen behind, but we've been working through technology modernization, and I'd say we're most of the way there. And now it's how do we kind of gain our footing back so that we're leaders in the industry when it comes to client experience. So that is definitely something that we're focused on. That's something that we are putting the right amount of resources towards. And something that in the coming years, when I come here and chat with you guys on this podcast, hopefully we won't have to talk about, because you'll be that impressed.
Okay. Janelle,
I'm in sales now,
yeah,
so that's what I do.
I could tell. All right. So last question, one that we often ask folks.
Oh, this is going to be good.
Favorite ETF ticker other than your own? So nothing that Vanguard does. What's your favorite ETF ticker?
Other than my own.
You can take some time. No rush.
I mean, I'm just going to be silent until we run out of time on this podcast.
Oh,
my favorite.
Down the clock. First time I think that's ever been the response. Is just let the shot clock go.
I think we have the most clever tickers when it comes to using Roman numerals. So VU is my favorite. It's 500.
I mean,
so that's
easy.
the greatest
Janelle,
ticker
look,
around.
you guys have a lot going on, but
could you tell
fun
that she works in
tickers is
sales?
not one of them.
Could you tell that she works in sales? That was that was the response.
I wouldn't claim that.
Yeah.
VU is kind of cool. It's 500 Roman numeral, but I mean that's
VU and chill. We're gonna get you a shirt.
VU and chill. Yeah.
My friend who's a heart doctor from college, that's his phrase. I saw him at my friend's 50th birthday party. He's like, VU and chill, man.
VU and chill.
Anyway.
VU and chill. We got to work on the merch.
Janelle Jackson, thanks so much for joining us on Trillions.
Thank you for finally having me.
Thanks for listening to Trillions. Until next time, you can find us on the Bloomberg Terminal, Bloomberg.com, Apple Podcasts, Spotify, or wherever else you like to listen. We'd love to hear from you. We're on Twitter. I'm at Joel Weber Show. He's at Eric Balchunas. This episode of Trillions was produced by Magnus Hendrickson. Bye.